Testing, one, two, three. Testing, one, two, three. All right. Let's see where we're at here. Okay, looks like we're gonna be live. Hey there. I think we are live. Yes, I think we are. Hey there, welcome to the channel. So yeah, today I'm gonna mess around a little bit here, and then I'm gonna talk about my wonderful loss on Ocugen. Thanks, Kevin. It's kind of funny. So yeah, I'll talk about that. I lost some money on that. Not a lot, but enough to annoy me. And so we'll go look at it, and we'll go look at like what I did wrong, to just kind of take a look at that. But first of all, what I'm gonna do. What's I gonna do? Oh yeah, I wanna take this guy here, unbreaking, and I want to, yeah, do that, and that will be too expensive, but can I do it this way? 33, okay, good. All right, we did that. Okay, that's good. Okay, so now what we're gonna do is gonna go over here. Okay, so this is from a couple days ago. Basically, we have this pump and dump going on here with Ocugen, OCGN. And so basically, I had bought a little bit of it. And so let's see what happened here. I think what I want to do is I should have a 6-month, 3-month candle there. Okay, yeah, so basically I bought some here, and I think I got it around $13. And then I held it to the next day, and of course, the next day it basically put in a doji, an inside day, basically kind of went down from where it closed, and et cetera, et cetera. So basically kind of a mess. And then today it went down some more, so let me do this. Yeah, so I bought it here on this day, and then I sold it the next day. It didn't go up, which I was kind of, I don't know. I just figured with all this stuff going on at GameStop and whatever, there was a chance it was just going to pop up, and I was ready to sell anywhere up in there. But nope, it just became an inside day. And then today it's down another decent amount, 20%, something like that. So it's sort of, as far as I can tell, it looks like we're into the dump phase already. Like, I mean, maybe it'll start pumping up again, but it looks to me like I'm not going to mess with it because I lost some money on it. So basically what I did was, okay, let's go here, and let's go and look, oxygen, okay. Yeah, so here basically I bought it at $12.95, almost $13, sold it at $11.66, so $1.29 per share loss. So that was kind of terrible, just didn't work out well. So let's look at, let's try to understand some of the mistakes here. So first of all, I mean, the thing is, it's definitely, I mean, you're playing with fire, so I knew I was playing with fire. So that was sort of a mistake, or sort of not a mistake. It's just, if you're playing with fire, you're going to get burned sometimes. That's just how it is. The next thing is, so I'll look at like good things and bad things I did. So I think the buy, in terms of that, given all the activity in some of these other pumps and dumps, it was probably worth it to take a little risk to see what would have happened. But then selling the next day, just selling the whole position, I think that was definitely a positive thing to do, because look, now it's down to another 20%. And even if, and it doesn't even matter now, right? I mean, it could go up into the 20s or 30s tomorrow. I wouldn't care, because I'm done with it. You just, so here it's like, look, you got to take your losses. If you had bought this day and got hooked into that assignment and you still haven't unloaded, I mean, it's a potential problem, right? It's not financial advice. This is, you figured out what you want to do. But I mean, this thing, if you were looking at GameStop, I mean, I would assume that we're in the dump phase, that it's dumping. So, if you're here, and let's say you had bought it here, which was a really bad time to buy, and then you sold it somewhere in here, and you took a loss, and you could have made money that day depending when you sold, but let's say you took a loss, and then you were holding on to it, and they're like, oh, here it's up. Or maybe you bought it here on this day, and then you're like, oh, I got a loss, and you keep hanging on. Well, you're not getting anywhere, like, right? So from these peaks out here, these are like, it's just still going down. Now it's slowing down. Its rate of descent is slowing, but for it to get back up here is really hard. It's very unlikely to happen. So when you look at it, so here you had the up, and then you see this huge gap, right? And then all the bodies of these bars are in here, or these candles are in here, and these are kind of, now it does, the wick did come down into here and did fill these gaps, but it's almost like, so what I would do is I would kind of look at this and try to I'll try to use kind of take the spirit of what the candle pattern is or whatever. But this is sort of like, this is like a little abandoned, they call it an abandoned baby top or something like that. And it's basically a bunch of candles that are separated by gaps. So if you look at it and kind of just ignore that wick just for sake of looking at it, you see you have these 4 days of just everything's up there in the sky. So it popped up there, and that pop is like, gosh, 150 to, the bodies of the bar are 190, $40 pop between here, separation. And they're all just abandoned, and then all of a sudden it opens down here and just keeps going down. So these are all, like, the point is that it's really hard to get back up into there, because even if you start rallying here, think all the resistance. These gaps, when you have gap up and you gap up like this becomes, and then you break back down it below it, this gap area of gap is known to be resistance, right? You have a bunch of people that are waiting to sell, and you can imagine, like, people that bought anything up in these 4 days, I mean, they're looking to sell. So, and the more this goes on, the worse their position is getting, and they're like, oh gosh, I need to get out of this thing, and the more desperate they're going to be. So if it tries to get up into there, it's likely, and you can do your own research, on these patterns and look at them. But so that's kind of the thing. So then going back to this guy, the one that I bought, and look at this one. Gee willikers, where is my brain? Oh, Ocugen. Yeah, so going back to this one, yeah, I mean, I just look. It didn't do what I wanted to do, so I got out of it. I'm done with it. And now I wouldn't be surprised. Now look at that other. Remember the GME chart? How you had 4 days that were up, and then there was a gap down. Hey, it wouldn't surprise me tomorrow or maybe the next day we get a gap down, and then these get abandoned up here in the sky. And then for them to get back up into there, it's pretty hard to do, because you're going to have all these people at this gap that's going to be resistance. If you're below the gap and trying to get back above there, it's very difficult to do. So let's look at another one here too, trade desk. Now this one here, so what I had done, this is like, it's been in a nice uptrend. It's got some volatility, but uptrend, and then it kind of pulled back to the moving average. It did have a bad day there, but it formed this like W, or base consolidation area here, right? And so basically I was looking for what is the high in this consolidation, and I put in a buy just above that. And so let me zoom in here. Yeah, this shows up the way I want. So now we zoomed into the 3 month, and you can see here. So basically this is one strategy that maybe you can use, is like, you see you have a W, you've had support here, you hit a low, you didn't go much below it, you didn't close below it for sure, you did, the wick did go in there for a little bit, and then and then it couldn't get back over this high, so I put a buy. So you see the W set up, and at the middle of the W, if you put in a buy above that. Now here's the problem. So I did buy on this day as indicated by the blue arrow, and I bought when it broke out, so I got it right around that breakout price. I did, trade trigger, basically you put in an order when it crosses that line, that price. Now I'm still holding this, but I do have to admit that this is it's not doing what I want. This isn't a good breakout. It came out, and then you can see how this bar squatted down. So this candle right here, it gapped up, went up, and you can see by the top wick, that means it traded all the way up there into this 877, but it came down and closed here at the bottom, because it's a black candle. I'm sorry, no, it's a black candle, so it actually closed up here. Right, so basically the thing is, it had this intraday range, a wide range, and it couldn't hold the range. It couldn't hold the intraday range, so it did not have a strong close. That's a very weak close. Ideally, a strong bar is something like this one here. It opens here, It's a black bar. It's a well, it's not a black bar. It's an open bar. It's a positive moving bar, meaning that the close is higher than the low. Okay, and so here you have a solid, strong bar of just it went up all day and it closed at the near the high of the day. So that's a strong bar. A weak bar is something like this or this, where it's reverse. It's marked in red here. You opened up here, you made it all the way down there, and you closed near the low of the day. There's a little bottom wick, so that's like a very weak bar. Strong selling pressure, and this one would be like strong buying pressure for that day. So here, this is very indecisive bar on the breakout. And you can see here it's following through with this indecisiveness. It's really not making much progress. It's not really getting out. I mean, I would have hoped that it would be charging at this high, but it's not yet. So I think what I'm doing is just going to be patient with it. Just watch it and see. I'll go double check, make sure earnings aren't coming out. I don't think they are. So basically the situation is I like to trade various patterns and things like not around earnings or news that I know is coming out. You still get hit with news you didn't know that was coming out. You can never tell, but I don't want to have anything to do with like trying to game in earnings, right? Because if you game in earnings and earnings were bad and it drops like 200 points, that happens. So yeah, so I'll just watch it like that, and I'll check the earnings, which I don't think are coming out. So I'll just try to give it a little more time. So that's what I'm doing on that one. Just trying to give it a little more time there. It's interesting here too, and I'll comment on Apple here. See, I had some. These were earlier buys. I had some buys back here, and I had sold up in here somewhere. It looks like, and but here you have a decent trend coming back into the trend. Here it got like carried away, and then it came back into the moving average. So here my red is the 50-day moving average. Right here, see, it's interesting because this is still riding the moving average, but it's really not going anywhere. So Apple is very weak right now. It's very kind of weak. So I don't know what to think of that. Neo, Neo. Let me talk about this Neo one. I did buy a little Neo. Now, this is a very similar thing because let's see. I'm trying to swing trade this. See if I can explain what's happening here. Yeah, I mean, I bought some here and sold here, and then here I made another buy. So basically, I can see that there's this consolidation period here, and I can see that we started getting some moves, some green bars, looking like it wants to pull off up this average, off this moving average here. So let me try to zoom in. So I think that, that's why I was buying here, because it's this 25-day moving average here. It's kind of just consolidating. I mean, it tried to rally here, got the crap kicked out of it there. But what it's really doing is it's getting too far ahead of itself, so it has to kind of just bide time and get into the moving average. And then here you can see it starts getting a little bit support here on this day. You get a little bit of support, and then I bought some here this day. We got more support, and the volume is not great, but the volume is ticking up a little. But then then here we go, we get a red bar here, so it kind of like lost its momentum already. So I have that, and I'm giving this a little bit of time too, but I'm not overly. Once again, this is not like a great breakout. It's not. It's basically today was not a great day for it, down 2.5%, and it closed below the high of the previous day. So yeah, so it's not really great. So I don't know, that one I might have to let go. Then I want to look at some other ones here. Let's look at silver. Now this is the iShares Silver Trust, and it's just an ETF. So supposedly they hold ounces of silver somewhere, but maybe they do, maybe they don't. That's one of those things. I'm not sure about that, if they actually have any storage or they're just trading derivatives. But either way, it's a way of trying to trade it. So this is an example here of a chart that's kind of, it's got some volatility here. Look at this, your gap down, big down day, another gap, and then it comes up. And then this was a huge day. So this one, they were trying to pump that day, and then it didn't really go anywhere. But this is one that when you would look at like a IBD type of thing, Investors Business Daily thing, this one he might be calling like a cup. And because he kind of, just the way he would draw this top, he'd call it a cup. So this might be kind of forming something. But what's interesting to see is we're settling out to the 25-day and the 50-day are both now ascending. So they're going up. They're making progress up, and this is above those moving averages. So although you got a bunch of red days here, this is kind of in an uptrend. I mean, the moving averages are up. The short-term all of them are, and you're above those moving averages. So you're getting corrections. You have some selling and some pullback, yes, but it is in an uptrend. So I'm holding on to just a little bit of that guy there, GDX. What's going on with GDX? Yeah, GDX is just this is like the gold miners. See, this is a case of it, had gone up. Now this is a downtrend, right? So this is a situation where you have the red and purple, so the 50 and the 25-day are going down. So short-term downtrending. You still have the uptrend in the 200-day moving average, which is this dark green line here. So, this is where you have this. You kind of pick what your trading time frame is going to be. Here in this particular case, actually, 30s, 150. Yeah, all these are downtrending when I look at it this way on the weekly chart. So yeah, they're all, well, actually, yeah. So the red one is the 30-week moving average, which I think is near the 200-day or 150-day. So this guy is flattened. So you can see that you've had, it's basically in a consolidation here. Now, if like on a GDX, like one of the things is, so if you're trading on a long term, there's a weekly chart, you got 2 years of data here, look at this W forming here, right? If somehow this thing starts moving up over here, starts putting a run at this, you could put a buy in above there maybe and buy some. And so here it looks much cleaner on the weekly chart. That now, if you look at the daily chart, it's just a mess, right? it's really very messy. So yeah, so that's one thing there. I'm not really overly excited about that. One of the things I've been doing too is I'm trying to just have a hedge position, because I basically am an S&P guy for the most part. And so what I do is I have a hedge position, and what I do is I have some of this UVXY. What's good about this thing is that what it does is it seems to respond pretty good to sudden market crashes. So what'll happen, so here's your, here in March 2020, this is the huge, when the COVID thing started happening, they started doing lockdowns on the stock market crash. Look how it responded. It went from down here, nothing, it was like $12 all the way up to 70 and 80. So that's why I have like a small amount of this as a hedge, and I've just tried to calculate it such that if you get another crash type thing, if that does happen, it should pick up in price as we've seen before, and and then I would have to sell it, and then I would have to go back and try to like increase my stock position, assuming at lower prices, basically try to do that type of a thing. So here once again it's low. So once again, you have to understand, like, this thing is a hedge position, and it's costing me. So it's costing me every month. This thing is going down every month, and so I'm acknowledging that, and I'm aware that it's got a negative carry, and I'm putting it there just so I have some protection if the market does crash again for whatever reason. If it ever does that, I at least should get the response from this vehicle to get some money back to minimize my impact, right? Because I otherwise have a lot of exposure to this S&P. So that's one that I'm doing as well. And yeah, and then I'll just kind of gamble with whatever else. It's interesting, the marijuana stocks. I know Sir Kevin is going off on these guys, but I had Canopy Growth at one point. I did ride these guys some years back, but I don't have them anymore, and I can't remember when I had them, but I've missed out on this run for sure, because it's very interesting. Back in here, see these marijuana stocks, these things, like, they were low, and then they had different periods of this speculation just getting ramped up, and now actually it's out to all-time highs for this Canopy Growth. Now it looks like this is like, for sure, this one is like a real company and stuff, so, but I'm sure they're well overpriced. So these are just like, I think at some point, they had some legalization and they had ran up here, crashed down, ran up here, and then came down. And I think part of this coming down over here at this, in the 19s, what was going on, I think, the idea is that I think the thing is there's not as much demand as people think. It's like okay, we're getting to the point where like in many states marijuana has been legal for years now. So it's not a big deal, and I think if you're like me and you grew up in the 70s, the reality is a lot of people smoked pot. It was illegal. It was always a no-no and whatever. And so the thing is, there's this novelty to it probably, where it's like, hey, novelty, go, you can legally buy some and go buy some. So, but then, how long is that sustainable? The people that grew up in the 70s are, getting older, and we're all to the point where like, look, I don't smoke any pot. I haven't in many, many years, right? So, and even though it's legal, I'm not going to go out and buy some, you know what I mean? So it just, so I think that the if you look at the pricing of all these stocks, you put them like the Tilrays of the world and all that, you just kind of wonder if they're just over predicting how much demand there will be, because it just, I mean, I don't know. I'd have to look at the numbers, but are they predicting like 80% of the population is going to smoke a joint a day or something? I mean, I just don't know about that. I just very doubtful of that. So, yeah. So I think that I don't know. Right now, this I think is part of the pumping and dumping going on right now. And the one I was looking at was this one, GT Biopharma. So I was looking at this one. Oh, and I was looking at it. It was at 0.45 today, and went at the 0.5. And I was looking at this guy. And I was thinking to myself, like, look, this guy hasn't run right now, and it's starting to run. And so I was really looking at it, and I was thinking, like, well, maybe I'll just buy some on a flyer, right? It's like 40 cents. And if, like, all these other stocks are getting ramped up, maybe they'll get around to this one. And I didn't buy any because I'm like, oh, I don't want to mess with this thing, Because what I did is I actually looked. I went to Yahoo Finance. I'm like, where's the revenue? They actually have zero revenue. Like, they've had zero, like, at least on Yahoo Finance, it was zero revenue for 3 years. I mean, didn't they have anything? I mean, I get it being, like, overpriced, but usually you got something to show for it, but zero goose egg. So I was just like, no way. But I don't know, maybe I'll look at it tomorrow and see. Because it's looking like it's starting to pick up. Someone's buying that thing. So I don't know. This could be the next pump and dump here. Now, what this company, like, I mean, I looked at you do your own research and your own thing, but, like, they had, like, zero freaking earnings. So, I mean, they're just, like, if you look at Canopy, some of these other ones, these are real companies, and they're going to be, they have the ability to be around a while, right? But this company, now, maybe they do, I don't know, but, I mean, no earnings at all. I don't know what their story is, but that's interesting. I'm surprised that this moved. So I'm going to go ahead and make a note about looking at that tomorrow morning. And I think the other thing I wanted to comment on, so, yeah, let me make a note on that. And, let's see. And then the other thing I wanted to think about, there was, I think I forget what I was going to. Yeah, I was going to look at this too, and what was I thinking? Yeah, here's a Grayscale Bit Trust. Oh, one thing on this, if you look at the Bitcoin here, this is kind of interesting. So actually, yeah, if you look, I had bought 400. I had bought 400 here at this point here, so it was at $15 for this, right? So this is whatever, some kind of like fund that holds Bitcoin or something like that. I mean, who knows? They could be day trade. I don't know what the heck they're doing. But I bought it like 15, and then I sold half up here at about in the 20s, right? So that was a good gain. I still have some. I still have 200 shares left that I'm kind of letting ride. But one of the things here is don't get over, like, I know a lot of people like get over focused on like trying to pick patterns, like, oh, this is a head and shoulders, a reverse head and shoulders. Like head and shoulders are one of the worst patterns that are most, they are overfitted. Too many people like claim things are a head and shoulder. They'll have like weird lines going at really steep angles for the necklines, and like, no, that's not a head and shoulders. Like at a certain point, you lose. You you got to go for the spirit of what the pattern is trying to show you at a certain point. So you can't overfit it. You got to get used to just sloppy, because the problem is everyone that is looking at those, right? Everyone starts to see a pattern start to form up, or what might form up. They're going to act on it, so they break the pattern. That's how it works. And so that's why, like, you go back 30, 40 years ago, I mean, you could do simple moving average, crossover systems, that would work. You'd make money. You could do simple this, simple that. Now it's harder to do that. It's harder to do that because like everyone sees the pattern starting to form and they jump in early, which changes the pattern so it doesn't get to form. But here I wanted to point, this one here is very interesting. See how this move in this grayscale, how it went up to 50 down to 30. So 50 to 30 is a $20. I think it's a 40% down. Is it 40% down? So let's see. Let me use my calculator here. Come on, dude. Let me show you this. I want to show you. Yeah, so here we'll just call the move 50 to 30. So 50, okay, 50 to 30. I can do that math, right? 50 to 30. So it went down 20 points. So it went 20 down on 50. So the move is 40% down. So this is a 40% move. Now here's what happens. So like when you look at double tops, people sometimes look and say, oh, look, there's a double top here. Well, in matter of fact, some people will look at this and try to say that this little area here is a head and shoulders. They'll be like, oh, there's a neckline. There's a neckline, there's the right shoulder, there's a double head, and then this was the left shoulder. It's like, no, not really. It's a consolidation. It's like struggling to get out of that range, and then it broke down to the range. From my perspective, it's like just get used to sloppy patterns, looking sloppy, and just look for support and resistance and whether something's like has a chance of breaking it, because that's where your moves are, right? If something breaks support, breaks resistance. And then to really get the pattern to happen. So if you look at, like now I'm looking, is this a double top? Well, this little thing here is not a double top. I mean, it's not. It's too shallow. It's not shallow. It's just a consolidation. Is this here a double top? No, it's just a consolidation. It's not deep enough. A double top has to be deep enough. But here, we're talking a 40% high to low. And then we're back up 40%. Now, this came down to the moving average, which is great, the 50-day. And this is how like a double top might play out. Because you've got to have enough movement for this pattern. See, the people that bought on the way up here to the second peak, it had to be a big enough peak so that they're aggravated that they didn't make it through. And if it starts going down, they start getting worried. You're not going to worry here. If you're on the second peak, you're not worrying that much here because it's such a shallow peak. It has to be a deep enough peak. This is a deep enough peak. So normally, like I use something like 20%, maybe 15%, 20% or greater to set the first peak on a head and shoulders, to set the head on head and shoulders, or to set a peak on like a double top or double bottom, something like that. And so this is what's potential here in this bits grayscale. You can see that has that potential. Now, the other thing to keep in mind is that if this comes to fruition, this is on a daily chart. It's all on the same time scales. So this is not a double top that would be like, oh, like Bitcoin will never ever get this high again. No, this just means if a double top and then it breaks through this low, if it actually breaks through there, notice if you break through there on the other side, let's say it goes out and you break through there. Oh, by the way, you're breaking moving averages and you'd be breaking this critical support, which is right at the moving average. And if you break that, you're liable to go down. But where would you go? So if this thing did put in a double top, where is it going to go? It's going to go down here. Can go back down to the 10-12 range, and it probably will find support there. I mean, I can't say, but so that's an interesting one here. You see this type of setup. There might be a setup here. So that's just one other thing that I kind of noticed. And so I think with these patterns too, I know like this one here, stock charts, I like that. And they have a whole chart school. They have a whole chart school. So go there and, it's really great. And so, yeah. So I think that's it for this one. So in terms of trying to uphold what principles I do have, I was playing with this U thing here, Ocugen. I lost money. I've recorded, made a note like, okay, this is what I lost. What have I done wrong? I still have to think about it, but I think the answer is like I really shouldn't play these really highly volatile things. And the other thing I wanted to comment on this is that it may be that I need to pay attention to after hours trading. Now, here's the thing. In the past, I used to do some after hours stuff, but 10, 20 years ago, and it's so illiquid